And in his most recent publication dated May 2, 2024, Arthur Hayes, the founder of exchange BitMEX, shared his insights into the crypto market's recent tumultuous behavior and the broader macroeconomic signals shaping potential future trends. Titled Mayday, his essay directly addresses the crypto market, which has experienced significant volatility since mid-April. Hayes begins by noting the observable distress in the crypto markets, which he attributes to a confluence of factors, including the end of the U.S. tax season, anticipatory fears about Federal Reserve policy decisions, the Bitcoin halving event, and stagnating growth in the assets under management for U.S. Bitcoin exchange-traded funds, and interprets these factors as a necessary purge of speculative excess, stating, "The tourists will sit out the next phase on the beach if they can afford it. Us hard motherfuckers will hodl. And if possible, accumulate more of our favorite crypto reserve assets, such as Bitcoin and Ether, and or high data shitcoins like Solana, Dogwhip Hat, and the, dare I say, Dogecoin." And applied for to adjustment rightness. A significant portion of Hayes' analysis focuses on the Federal Reserve's recent adjustment to its quantitative tightening program. Previously set at a reduction of 1950, Fed has dialed this back to $60 billion. Hayes interprets this as a covert form of quantitative easing, injecting an additional $35 billion per month into the dollar liquidity pool. He explains, when you combine the interest on reserve balances, RRP payments, and interest payments on U.S. Treasury debt, the reduction in QT increases the amount of stimulus provided to the global asset markets each month. Here. Another reverse have been before that U.S. safety would stand out what he does on etality with Trump a lot of upcoming quarters for Q2 2024. The Treasury anticipates borrowing $243 billion, a figure Hayes points out as $41 billion higher than the previous forecast due to lower than expected tax receipts. He predicts this increased supply of treasuries could lead to higher long-end rates, a situation Yellen may counter with yield curve control measures, a scenario that could catalyze a significant rally in Bitcoin and crypto prices. Hayes touches on the failure of Republic First Bank, emphasizing the response by monetary authorities as a key indicator of systemic fragility. He criticizes the federal safety net, that it ensures all depositors are made whole, arguing that it masks deeper vulnerabilities within the U.S. banking system and leads to a stealth form of money printing as uninsured deposits are effectively guaranteed by the government. This, Hayes argues, is a fundamental misalignment that could lead to significant inflationary pressure. And Hayes is candid about his investment strategies in the current environment. So he advocates buying now. I'm buying Solana and Doggy coins for momentum trading positions. So for longer term shitcoin positions, I'm upping my allocations in Pendle and will identify other tokens that are on sale. I will use the rest of May to increase my exposure. And then it's said time to set it, forget it, and wait for the market to appreciate the inflationary nature of the recent U.S. monetary policy announcements. He concludes with a broad prediction that despite the market's recent volatility, the underlying liquidity conditions created by U.S. monetary and fiscal policies will provide a floor for crypto prices leading to a gradual upward trend. While I don't expect crypto to fully realize the recent U.S. monetary announcements, inflationary nature immediately, I expect prices to bottom, chopped, and begin a slow grind higher. He states, signaling his bullish outlook. For Bitcoin, Hayes predicts that the premier cryptocurrency will recapture the key $60,000 level and then move in a range between $60,000 and $70,000 until August because of the one's annual summer lull. At press time, BTC traded at $59,393.